I will start with the definition or the introduction part. Just see it like this: microinsurance. It is an insurance for low-income population with small sum insured, small premium, but with different distribution channel system. For example, if you want to sell the traditional or the conventional insurance, you can sell it through a broker or an intermediary. But you cannot sell microinsurance on an individual basis. It is a policy or a kind of product sold on group basis. So it requires what? A different distribution system. I'll jump this. Okay. The other is importance of microinsurance. Microinsurance serves two purposes. The first is it complements the social protection programs run by governments and the donors. So there are people under poverty line. These people must be served by microinsurance. So usually you see the many pilot programs that we run in this country for the last 15 years, in which my company is the role model player in that case, is the pilot-based program which falls under the social protection microinsurance. The second component of microinsurance is the business case, which is the main subject of today. So the importance of microinsurance continue from literature. The literature basically says what? If you want to maintain the fruits of development, be it in the area of poverty alleviation, be it in the food security, these fruits of development can be maintained as long as you have very good designed microinsurance programs. In the absence of this, all the development efforts will be eroded. So we can see also microinsurance from two perspectives. As I said earlier, the social protection instrument. This is basically the one I already explained. From the benefit perspectives, microinsurance, the social protection part, supports the poor and excluded people. It reduces the physical burden of the government. A very good example for this is that in 2021, 4 insurance companies, we insured a side program in Somalia region, including the Ethiopian Insurance company. We paid 100 million per in claim. So had this product not in place, the government could have paid this. This is what they said. It complements the social protection, or it reduces the physical, and the bill per day is classified as people under poverty line. So taking this figure, we estimated like for 6 African countries, in aggregate, like 40% of must be served by the social protection microinsurance. The second one is the low income, like 42% of these 6 countries are low income population, which is making a very good feasible market for microinsurance business. Just taking the picture into the Ethiopian case, Ethiopia, according to 2021, okay. Okay, so like people earning below 2 USD, estimated like 21 million. This is the social protection microinsurance currently serving under pilot-based projects. 65 million population, according to the rough estimation. This is the feasible market for microinsurance or the business case. So you can see how huge market is there. But because of different reasons, this sector, the business case microinsurance, is not well developing. We will see the problem later. So in terms of experience, microinsurance is relatively new in the region. Uganda is one of the pioneers in the region to introduce microinsurance in 1990. In Ethiopia, in 2007, microinsurance is introduced, because there is some confusion who introduced it or not. But from my knowledge point of view, Nyala Insurance is among the first private insurers to introduce microinsurance in Ethiopian insurance market. So according to the current information, in East Africa, in 2021, like 6 countries, they are insuring 4 to 9% of their population. Kenya is actually the best performing country, not only in microinsurance, but also in the traditional insurance. In Ethiopia also, there is lack of data on the experience. but credit life insurance is dominating. About 5.5 million people are 7.5 million people is covered with credit life insurance. So this is the most important. I make it in red. The ability of MFIs and the cooperative to underwrite their own products has seriously discouraged the development of microinsurance. For example, like Nyala and Oromia and others. Why? Because the provision or the proclamation exclusively brought or gave the business to Microfinance Institute. The Microfinance Institute basically, their core business is extending loans to low-income population. But while insurance companies are starved of microinsurance business, this regulation gave extra business to microfinance institution. Okay, currently there are 4 insurers actually operating in microinsurance, 3 private and 1 insurance companies. As I said, microinsurance is given in 2 aspects. One is the social protection part, which is running under index-based pilot after pilot programs, and the other is the business case. So the focus of the problem is the constraint. The first, the constraint for insurers is a lack of incentive, experience, and expertise, because no micro insurance company is going to engage in business unless there is feasible market confirmed by scientific study. There is no incentive to attract. The other is the operational limitation. Mostly microinsurance is not as such like a business in conventional insurance. Even the structure and even sometimes because it is a loss-making business, it's not much liked by management. Every time there is such problem. The other problem is distribution channel. The distribution is mainly focusing on traditional insurance. Majority of the low-income population targeted for microinsurance is in rural area. The other regulation is also regulation which gave the credit life insurance for microfinance institution. This I would like to emphasize here. Most micro insurance companies in the globally and in African experience, they commenced business with credit life, but credit life is currently given for microfinance. So unless the regulation reshape these things, I think there is no insurance to be engaged in such business. The other is from the customer side, most of the target are low-income population. From the regulation also, we have another problem, no premium, no cover, because the low-income population, we have 2 problems. Their income is low, second, their pattern is irregular. But no premium, no cover cannot apply on the this segment. For the recommendation part, the first is to undertake diagnostic study. Comprehensive study has to be taken. Second, provision of relevant data and support by the government. Legalizing distribution system. Currently, we don't have distribution legally or legalized distribution systems. Third is amending the legislations. As I said, the current proclamations that give the credit life insurance for microfinance business has to be rectified or amended. The other is also amending the regulation part is that microfinance institutions are undertaking taking this profitable and an entry point business without having the right professional and without also having reinsurance. So unless this is reshaped, it will be difficult for other private insurers to engage in the business. This is the same also. The last one is building national capacity, because index insurance, particularly the microinsurance, which is a very new one, requires expertise and technical knowledge for which we need to have national capacity. The other one is, the last one, a formation of a consultative and a collaboration, because there are many confusions. There are many donors undertaking pilot programs. The private sectors, some of them are engaging, and donors are, the government has also interest. So there is a need to have a formation of a consultative to reintegrate to link the government with the industry players, with the donors. And finally also, we need to have a very good collaboration between the regulator, the Ethiopian Insurer Association, to reshape the microinsurance landscape. So with this, I thank you very much.